Hello. So we will wait for a bit so everyone can gather. So okay, Goody, we can start. There's probably not a lot of people because Warrior didn't make the announcement because he's traveling. He's traveling somewhere. I don't know where, but as I talked to him, he said he's traveling and he really would want to come and be in the spectrum, be in the lecture, but he just can't. So yeah. How are you, Goody? Goody, how are you? Okay, so we can start. Okay, let's start then. So today we're gonna talk beyond basic developing a winning trading plan. So short about our Trading is Hive community. It's community built to improve other traders who are novice or who are old and professional. Uh, you need to this community is made for those who want to learn and expand their knowledge, and today in this lecture we're gonna talk about beyond the basics, developing a winning trading plan, my own profitable and tested entries, and more looks and mental states you need to overcome, volume profile, zones, market structure, and advanced liquidity. Advanced liquidity. So today we're gonna talk about the built entries that I tested over my 3 year knowledge, 3 years of experience. I built and created these entries and this knowledge that I have. It's also was taken from the courses that I take, the structure, and the main thing that made the lecture made the lecture not the lecture but made the entries built was the from the courses that I took. So let's dive in and see what we have. So first, and my favorite entry is called LC2A. This entry is taken from a photon course that I took and learned a lot about, and it's like one to one. So basic what we are looking for in this entry is we find a zone, a POI, which is good for us, like which is likely for us to trade in. Hey, real Kartik, Warrior is busy right now. Maybe could you make the announcement that the lecture already started? So we have the LC2A photon entry, and we this entry I use it the most. Today we're gonna cover two more entries. One of them is LC1A, and another is CM1A. So this entry is really basic. We go and see our POI. Then after that we go and drop to the lower of our time frame. That for me it is 5 minutes. And after we drop into it, we wait for the price to sweep strong liquidity. So first thing what I ask when I drop to lower time frame, did we sweep strong LQ? Did we sweep strong LQ? If the answer is yes, we wait for entry with the candle closure above. Then another thing that we ask ourselves, is the LQ strong? We need some evidence like a chalk or something that can confirm to us that this LQ is strong. So let's say we are in a downtrend of chalks, and then after a long time we get a break of fractal structure, that is a change of character, chalk, and then we wait and we don't enter and we don't care what price does until this strong created LQ gets swept. We're gonna talk about advanced strong LQ and how it's how we can see that, and what evidence do we need to count the LQ strong or not. So we're gonna talk about this entry today. We're gonna do some live backtesting, and we're gonna talk how to use it. Then we have LC1A. This is also taken from the photon strategy course, but it's tweaking. So this entry has 65% win rate. This one has 50. So this is a strong entry. So what we look for in this entry, we need to remember, for price to move, for institutions to get in on the price action, we need a strong liquidity sweep. So that means we need strong liquidity get swept, and then we need some kind of confirmation that institutions got in this play. So when LC2A we break structure and then break the internal strong, we wait to see if the candle closes internal strong, and then closes and breaks the internal strong. If it sweeps it, we can look for entry on M5 for an entry on creating a new structure, then using the token LQ from this internal strong structure to enter on the zone. And then we enter the zone with stop loss above the zone, and we enter and then see a beautiful push down. And then we have the newest entry that I created. It's also used on the M5. I took inspiration from other traders. This entry is really simple. No. I just tested that on the M5, 5 minutes, the entries work the best for me. It's, when the price marinates for longer, it gets out like tastier, how it could say. M5 makes the confirmations just better, more, it's like, it has more confirmation when it's confirmed on the higher time frame. So we always need to remember that higher time frame beats lower time frame. So we need to know that. But we also can like install these entries on the M1 or even lower. But I don't recommend it because it needs to have a lot of more add-ons, because on M1 we can see a lot of fake outs of the strategy. So yeah. So CM1A, this strategy is not mentioned in Photon. This strategy was built on the guy. If you are the 4 hour zone, can you still use the M5 if you want to trade the 4 hour objective? Yes, but I would recommend waiting for a confirmation on M15. F15 confirmation would be better, or even 10-minute confirmation. But on 5-minute, yes, we could look for 4 hour objective, but it would be better if we got a confirmation on M15. Because on M5, when our main time frame is M15, our lower time frame is M5. When our main time frame is 4 hour, our entry is 15 minutes. So that's the thing I tested, and those things are the best working. So I probably answered your question. Did I answer your question? Hey Goody, did I answer your question? Okay, let's move on. So to remember the fact what we are looking for to enter on the markets, we look for liquidity to take, so we could institutions could use it on the markets to enter. So this entry, we wait for accumulation, we wait for a range get created on the 5 minutes, and then when we trade off unmitigated zone, we sorry, we wait for a sweep of liquidity to our side. So that means if we want to buy, we want to see liquidity swept on the downside, and then we want to see a candle confirmation of a wick, but also a break of chalk and everything else. We're gonna see everything in the live backtesting. It also works. So we have our 3 entries. So every time when we come into our POI of good volume and everything, we jump to lower time frames and ask ourselves if we have neither of one of these entries. Do we have LC2A, LC1A, or CM1A? Sometimes we're gonna have, most of the times we're gonna have LC2A. Sometimes you're gonna have LC1A. Sometimes we will not have LC2A and CM1A. I know this is interesting names. You can call them as how you want. This just was recommended to me to name this like them. So, yeah. So sometimes these 2 entries can occur. When we have these 2 entries, it's just more confluence of our trade, and it just shows us that we can risk a little bit more. We can use little bit more of a, we could use a lot more risk on this side. So we talked about all of these entries. So now we're gonna jump into charts and look for how to trade them in the live market, how to trade these entries in the live market. So yeah. Let's create a new one. And let's take the $10,000 account. And then let's create, and let's go backtest and see what the charts say to us. So first, we can leave it like this. It doesn't mind me. So first, every morning, every Monday morning, what I do is go on the daily chart and see what the market says. So on the daily chart, we can zoom out. Yes, we will talk about how to see if the liquidity is too far off the charts. I will talk about this. So okay, let's see. We have a swing structure break here, and let's follow it. We had a pullback, we had a break here, then we had a break here, we had a pullback, we had a pullback, then we didn't have. So now we were in this like range like this. So we can now, so this is strong, this is weak, and we broke the weak structure. Did we break it? Yes. So we broke this weak structure. We can say that we broke it. And then after I draw my swing structure, I go and look into my internal structure. Wait, you're not seeing my charts. Oh, fuck, hell. Really sorry. Here we go. So how we draw our swing structure? We look for like a bigger move, like this, a bigger move. So a big pullback, a big move up, a big pullback, a big move up. The little moves that happen here, you see the little moves, are called internal structure. And internal structure has even smaller moves called fractal structure. So we just draw the swing structure. We're gonna draw the internal structure. For me, for internal structure to be considered a pullback for internal structure, I wait for 2 candles getting printed in the opposite color of a pullback or a continuation. So let's say if we have a bearish pullback, I would want to see two bullish candles for us to say yes, this is our internal pullback. But right now, before the break, we also broke the internal structure. So let's see. So we broke internal structure here. We broke it here. And after this break, we had a pullback and we had another break to the downside. Here again, is this green candle considered a pullback? No, because it's only one. We need to wait at least for 2. This is 1, this is 3. So this is a pullback, we break. Again, we broke the structure. This is 2 candles. We pull back, we again break it. We pull back, again we break it. And if the risk to reward is good for us, we can trade from all of these zones. So yeah, let's don't push our time on these charts. So let's go and see what's else. So we can see here we have a internal boss. So wait, yeah, this is our internal boss. So we got break here, and a break here. So yeah, and we already built here. We built strong liquidity. And why is that? And sometimes it's good to mark our strong liquidity on the higher time frame, just because to know how market can move. So why this is strong liquidity? We had triple no, did we break it? Not really, it's not considering us. We had triple zones that protecting this low. Then we got a shift of structure, and then going back to our structure. So we had another confirmation that this is liquidity point that we probably gonna target later. So as we see, it got swept later on. We entered this zone and it got swept. So okay, let's go a little bit faster. So we had internal break here. Wait. So we had internal break here. We didn't have internal break here. So what happened here? We can ask ourselves why we didn't break it, why we didn't do it. So first things that we see are the fact that we mitigated the extreme levels of strong swing in the discount zone. This is a discount zone, I can just tell. It's really easy. If you don't know if this is a discount zone, is it or not, just like go on the price. Wait. Go on Fibonacci. Wait, I will show you. Go draw from the swing low to the swing low to the swing high. Then change this number into 5, and now we have our cheap zone and our expensive zone. So at the bottom we have our cheap zone. So this means that here price is cheap. It's too cheap for this range, so it's a good idea to get into here and look for buys in this zone. And we use this Fibonacci tool for our one of our confirmations. So if we know if zone is good enough to trade off or not. And I see we wants to ask a question. So come here to speak, ask your question. Hello, we.
Hello, bro. Can you hear me?
Hello, yeah, we hear you.
Bro, according to trend, it's actually bias is bearish, right? We will mostly see the trade for premium zones, right?
This is just one of our confirmations. So let's say if we would want to sell in the discount zone, it would be more less probable than it would be selling in the premium zone. So it's just that.
Yes.
So just that.
According to trend, we have to change that.
What?
Actually, I'm a scalper. I'm a scalper.
Yeah.
I will use 15 minutes and 1 hour for trend, and 15 minutes for confirmations, structures, and 1 minute for entry. I'm new to the daily and weekly profiles. I'm learning that. Ask that.
So yeah, okay. We will go if you have no more questions, we will go on with our learning. We'll finish with this
Yeah.
concept and then we will go forward to lower time frames and how we can see the markets.
Okay, I will finish. I'm done.
Okay. So okay, so let's see. When we went to our extreme levels, so what we saw in the back leg, we had liquidity back here. And now, as Goody asked, is liquidity too far if we create it like here? So the answer is not really. We use two types of confirmation to ask ourselves if liquidity too far or no. So first question is PBL. Is the PBL mitigated or not? So when we ask ourselves is PBL mitigated or no, we ask ourselves this. And how is PBL drawn? We just draw the support that broke the liquidity, and if we have like wait. And if we just pull back and react from this zone, then the confirmation is invalid. Then we just say, yeah, we will wait for another confirmation. So what happened? We pull back, but just always remember, we can't use this liquidity until we mitigate a good zone. So now you could ask why trading from this zone wouldn't be a good idea. The answer is we are in the pullback. We are still in the pullback. We didn't mitigate this extreme zone. And as we see it, we don't have any more zones to mitigate. So we expect for price to go down from this zone when we mitigate it. So when we go back, see that we swept this liquidity and then just had a lot of confirmation entries. So how another way to confirm if the liquidity is too far is just looking and asking yourself how much times did we already had a entry confirmation. So for me, entry confirmation is when we break low or high of the candle. So we broke once, we broke twice, we broke 3 times before mitigation. Not really. I don't mark fair value gaps, but we also understand that if we look at the fair value gap here, we could also see that it held and it gone up. So we got the fact that this liquidity got used 3 times of entries, and we already had fair value gap mitigated. So we can say safely that this liquidity is irrelevant and we want to see another liquidity occurring. So then what happens? We mitigate the zone, no liquidity. We go down, we go up, we create a strong liquidity by breaking the zone. We then go up, sweep the liquidity. Why it's one more confirmation how we know that liquidity was swept and a lot of institutions coming in. It's when we sweep liquidity and see wicks. When there is wicks and when the candle is 70%, 70% of the candle is a wick, we can safely say that in that candle, institutions put their money in. This is another of confirmations. This confirmation is used on CM1A confirmation, and we can use it like this. So we swept liquidity and then we gone down, and it could be a perfect honestly trade if we look like this, we could enter here. Yes, and we could target this. This is on the daily chart. We could target on the lower charts, but this is just the outlook. So now I just pushed it too far, but we understood the things that we are looking for and how one of the entries work. So now we look where is our internal. So we broke here, we had here. So okay, our internal zone is here. Okay, wait, I will invite. Yes, Saitama, please come to the stage, speak.
Uh, can you hear my voice, sir?
Yes,
My voice is okay to.
yes.
My question was, what will be the USD bias for this month and next month? Can you please explain that?
Yes, we're gonna go through. I just want to explain the concepts of the structure that we are gonna talk about,
Oh,
and I will
okay, okay, okay,
give my new views on this month and the second.
okay. Okay, sir. Okay. Thank you.
You're welcome. So let's go real quick. Uh, Another entry confirmation we have here. As we see, we swept the strong internal and then we went down. So just remember that this is another candle confirmation, another confirmation of a trade. So, sorry. So if we're gonna go down on the 4 hour, we're gonna just real quick fuck analyze this trade, and then we're gonna go forward of analyzing the 4 hour, the 15 minute, and then we're gonna go forward and took some entries on the 15 minute, and then we will talk about what we would look on the next 2 months of this shenanigans happening on the markets. So what happened? We had the creation of a strong LQ here, double top, and we swept it, and then we had the closure on this zone. So how this would be traded? Wait, let me show you. What the fuck? Let me show you. So how it would be traded? What is happening? I don't know. I am lagging or what? TradeZilla is strange, honestly talking. It's like it's really shitty. Really shitty. It lags a lot, and there's a lot of problems when you try to do something. Because right now it even doesn't let me go back in time. Oh yes, it will not let me. So okay, yeah, sorry. So let's see. We swept this liquidity, and then what we have after sweep, we didn't close with the candle. We had a strong rejection from it. So how we can confirm that this will be this will be sweep. Thank you. Yeah, I will try using FX replay because I'm already like done with TradeZilla. It really annoys me that it's really laggy. I don't know why even is that. So yeah, we swept this internal strong, And then how we can confirm that this zone is this zone is good to trade off. So we don't have any zones here. We have this one, but like, you know, on our main time frame, we don't have any zones to trade off. So what we would do now is go on, wait for the wick, and then see what happens. We instantly see that we have a chalk. So after a chalk and a sweep of this strong internal structure, we can look for a break of this structure like here, and then we could mark our zone. After that, we set our entry on the zone start and put like a 3 or 10 pip buffer, and then we target our risk to reward. So this is one of the entries that we have sometimes. So yeah. Also there was the other entry. So what happened here? On the 4 hour we had consolidation, and then we spiked up, swept this consolidation, we swept this liquidity, and then we went down, and then we created a wick which is 70% of the body. You see, it's almost 70%. It's a good confirmation. And then you could say, but wait, there is also this wick. This wick is not valid just because it was created in the middle of another candle. So that means it's an insider candle. So we don't take these candles and we just ignore them. So yeah, wait, I see someone texting. Yeah. So yeah, let's analyze this. So this is 2 entries in the one. So okay, now let's analyze our charts. So we got a pullback, a break of structure. So let's see, we got a pullback, a break of structure, again a break of structure, a break of structure. But where is our swing structure? Our first swing structure is here. Then we go down and see it. No, this is a valid pullback. So yeah, swing structure, then we go down again, and then the last swing structure that we had is here. So we draw our swing structure. Honestly said, one of the mentors on the Photon, it said it very nicely, and it said one thing: learn multi-time frame analysis, learn how the market reacts on the each time frame, and you will become profitable trader and even more. Just by looking what the higher time frame is doing, you can learn a lot and you can see a lot more than you would on the other occasions. So yeah. Okay, next thing that we could do is draw our internal here. Yeah, so we broke this structure. Our low is here, our strong one is here. So yeah, when we have this large range of internal, we just, after the wick, we could say, after we have like a strong liquidity, we have a strong rejection, we can draw internal structure. So just every pullback, create it, we draw it, and we could trade from the zones. So let's say I would draw my pullback. We could see this is the zone that has a lot of volume. That's the point where is a lot of volume. I would drop to lower time frame and see what's happening here, but it's really choppy, so I wouldn't take this. But it's just a reminder that we could take this. So yeah. Okay, so we got wicked 3 times. We failed to break the structure 3 times. And let's see where is our zone. Yeah, so this is our zone. We draw now one more thing that we could use with the volume tool. We go back and see which candle is the best for drawing our zone, because there's a lot of candles, but the nearest candle without any mitigations is this one, and it's the biggest. So now we would wait for 2 things. We would look out when we trade for this zone, because still we are in the opposite direction and the swing structure is bearish. So okay, let's drop to our 15-minute. On the 15-minute there's more chaos than we imagined. Yeah, so it's really choppy price action on the start of January. So just remember that, because it is really choppy on the start, not gonna lie. And we have a really big range because we probably had some kind of news or some kind of event that happened that dropped the price a lot. So now so now we could see that we have this big range, and now let's just draw our nearest internal structure, and let's get to actual trading and see how I would look at the markets day-to-day basis. So okay, let's see. We got our down, we got our break of structure here, then we had our pullback, we had our break. Did we have another break? Yes, we had a small but valid break here. So yeah, we had a small but valid break here, a valid break here, and a valid, yeah. So we had our valid break, and the internal now changed to be bullish again. So now we could see the 4-hour. It's had a pullback, had a back, and we now could see that it failed again close below the swing 4-hour structure. So now what we can do is go back, and now we could technically trade bullishly into the in this market conditions. First things that I would look for is until where I should trade this market behavior, because it's really risky to trade against strong bearish trend across all the time frames. So now what we would do, we now can trade until this zone or this zone, this bullish bullish time frame, because we got a change of internal structure. So now we could draw our zone here, and now we could wait for we already had a mitigation here, so it's probably not gonna pull back, but we will see. Yeah, so we pulled back, then we dropped to our time frame, 5-minute time frame. So what we see here now, we see consolidation, but do we see any liquidity? No. So we wait for creation of the liquidity. So now we had this internal shock here. Then we had a down movement. So let's see if we did create any of liquidity. Yes, so we created another liquidity here. So we had now these two liquidity points swept. So this liquidity was created by internal fractal break, and this liquidity was created also by internal chalk fractal break. So now when we swept both of this, it's valid to enter. It's valid. So after the weekend, there was a lot of liquidity swept, a lot of stop losses hit, and it's we have a gap. Oh no, this is not even after the weekend, it's after New Year's. So now it's valid to enter here, and the market conditions are pretty good, and our target could be even this liquidity point here. So we could target here, but just remember we playing against our higher time frame charts. So which from what? So yeah, so this is really interesting place to trade. So we could trade it and we could not trade it, because yes, we could trade it because we got 3 times sweep of this 4-hour strong structure, and we didn't break it even once. This is 15 minutes, sorry. But we also, yeah, 15-minute week swing, and we had a break of a strong long internal structure here. So now technically, yes, we could look for buys from here. So this is not the best setup. I instantly say this is not the best setup, because we instantly entered and smashed. And now let's see what happens. We chopped around. There's nothing interesting happening. We had a strong move, but one more thing that we could learn from this, from my own experience, is the fact that after New Year, these liquidities doesn't really count. So if we're gonna have a new liquidity get built, so let's say, yeah, we had a small pullback, we had a break of the structure to the upside, and then we had a break to the downside, and now we need a break to the upside again. Wait, upside, downside. So nothing much happening right now. We need a strong liquidity creation. Okay, so we got one of our entry confirmations. So now we can ask, did we have any liquidity built up? Yes, we had this range build up, and now we would look for a candle that has a 70% wick, like probably this one. No, this is not the one. But we have this range. Yeah, this is not the one. We have this range. And we just wait. And now we got our candle. It's a big one. It tapped our oh, we didn't get it off. Okay. Wait, let's wait for our, yeah, let's see if this one candle is our confirmation candle. Not really, but it moved up. So maybe it was, maybe it wasn't. Let's see. Always trade correctly, not incorrectly. It's the best way to trade. But we could look back and ask ourselves, is there was any valid confirmations? And yes, there is always a valid confirmation. There was probably here a valid confirmation, but it was in a good range creation. This was in a good range. Then this one is in a good range. So yeah, we created a range, but we could say that this was also created range. We could say we could take a stop loss here. Then we created another range, a small one. We got our confirmation. We got stopped out again. So yeah, it's not really good range creations. So this is a valid range creation. And we would now want to see a candle confirmation, but we didn't get it. Most of the times, well, or did we get it? No, we didn't get it. So now we could move on. Now we wait for our another entry, and now we just wait. We broke this internal structure, so we redraw our zone. So we just come here, redraw our zone, and wait. Yeah, so we could trade from this zone. So let's wait for mitigation. We got a mitigation. Now let's look. Do we have valid liquidity? No. Yes, we got a break here. It's a small one, but it's a break. We got a break here, and we got sweep of liquidity here. Is it still valid? Now the question is, we got liquidity broken. We look for our PBL. No, this liquidity is no further valid just because we broke it, we pulled back, and then we mitigated the zone. So this is not valid. Yes, it's valid to use sorry, it's valid to use the volume profile tool like this, but I prefer to use it on the fractal zone on the last wick, so I get a better win rate. So yeah, so now we could wait and see if we did get another strong liquidity build. We got a break here, and what we want to see now is some kind of liquidity build or sweep of this low. I would want to see sweep of this low. So did we get it or not? So price moves up, but we don't care because it could be just a fake out. So it moves down, it moves up. We got a full liquidity sweep, full liquidity grab. Now let's see, where is the best zone to trade off? So we could target here. So okay, now let's go on the market. and see. Yes, our zone gets broken. Let's see if there's any other zone that could hold. Yes, there is this zone. So let's see what happens with this zone. So we got a break of structure. So we got a break of structure. Did we have a PBL? No, this is not a correct PBL because we broke the structure and then we look for our PBL confirmation. So now we could look for entry from here, but as I see, we instantly got stopped out here. Now let's wait. So, okay, wait. Yeah, so why I didn't take this trade is just because this was too low of risk to reward for me. So I just looked at this candle. This is valid confirmation candle. I saw it. I saw where is my TP. I saw that it was too near of me and it's not worth it. So now, after a long of time, we broke internal structure, swing structure. That it was, it wasn't able to break it a lot of times. So now, when we break it, we now can say like firmly and believely that now we can trade shorts. That we can trade shorts like right now, and we can follow our bearish internal levels. So let's see. Yeah. So now next POI is our nearest. Yes, taking trades against the trend is risky, but we can do it when we have the right confirmations for it. So now we got our break of structure and we got our volume profile. So now we could wait for mitigation. I will go a little bit faster because we already did this for 2 hours. So I will go faster to show you how the entries occur. So we have our zone here. We have our strong zone here. Now we got mitigation of that zone. Did we have a full closure? Yes, we have a full closure. Do we have a valid liquidity here? No. Let's wait for liquidity creation. Do we have any liquidity created? Not really. We got a down movement, an up movement. So no liquidity. No liquidity. Yeah, so let's go back. Let's wait. Let's redraw our volume tool. So yeah, it's still valid. So let's wait and see what will happen. We're starting to have a strong pullback, but we broke swing structure, so we can go to 4-hour charts and see if there is any zone then that can interfere with our entry. So nearest zone with the most volume is here, so we can draw our range, but it's really too far. So we just need to remember that the price can change at any time and we can't predict when, just because we don't have near enough zone that can be as confirmed that we're gonna finish our pullback. So let's see what the market now do, what it will do. So it's chopping around. We don't do nothing when it's like this. It will, yeah, London opens and it's much more better volatility. So now we just wait and wait and wait and wait and wait and wait. We need to see a mitigation of the zone. We just wait. Yeah, it's weekend. Wait, let me skip through the weekend. Here you go. So we wait. Trading is a waiting game. If there is no ideal market conditions that you want to see, just don't trade. So okay, we got our mitigation. Did we get any valid liquidity? Now the question is this. Yes, we got our correct liquidity here. So now we have a confirmation? Yes, we had a confirmation here. But now it's only one confirmation. So it's valid to enter from just one entry confirmation before mitigation. So let's see where we should target this. Where is the next volume pool that we should target? It is here, but did the leg and so okay, we could say that we could go until here. Yeah, so yeah, it's 2 to 2. So to be safe, we could enter here. Why we don't like enter with higher risk reward? Because we expecting a pullback, and we need to be safe with the fact that at any time we sorry, this is unintentional. I accidentally put market execution, not a limit order. Sorry, just let's go back. Yeah, cancel this. Yeah. So let's wait. Let me do one position. I talked about all the entries today, so I did my job. I just want to show how it plays out live. So, sorry. So now we got our liquidation here. It is still correct because we didn't have a PBL that could fuck with our entry. So we had a correct entry, we have a correct zone. We just enter and see what the market does now. We will be stopped out or we will have a TP. So we'll wait, we just wait, we don't care. We can skip through. So now we got stopped out, but no worries, because what happened? We built a lot of liquidity here and we got a nearer liquidity sweep. So now we could try one more time, and from that if we get another failed entry here, we just stop and wait for another opportunity. So we enter here. Yes, so our entry got invalidated and we just move our limit order. So we just move it here. We put our correct entry confirmations. So okay, now let's ask ourselves, did we get a strong liquidity sweep? We had a uptrend, a downtrend here, then we got an uptrend again, and then we got our first market confirmation here. and then we broke the zone. So let's see if there is any zone that we can trade off. Is there any zone to trade off? Yes, we could say that this zone is correct. So let's see if we're gonna break it. Did we break it? No. So we could put our entry here. And then, yeah. So the zone got invalidated, and this is one of the confirmations that is the pullback is happening. Yeah, we could look for new entries until the liquidity is correct and until the zone is still not broken. But right now, as we expected, we had a pullback occurring. So now I would just look for buys from here because it's a strong, really strong pullback. And now we just could I just really want to show you one trade one trade how it looks. I can't finish the section on a loss. A session. So we had our zone here, so we just wait. We are pushing to the upside. Again, we are pushing to the upside, and we are pushing really hard. So it just shows us that this bullish trend is really a pullback. So okay, now just let's wait. We got our change of volume, so that's one of the confirmations that we could see a potential pullback, but we don't see it. We got another internal break. We have another let's go look what's happening here. So we broke a weak internal. We have our strong. So yes, this is for our strong level, but I wouldn't look into it too farly because it's already mitigated and we are in the strong trend. So now I just would wait for a confirmation. We could see some kind of a reaction from this, but yeah, but it's not really how it's said, it's not really bothering us because it's already mitigated. So let's see, do we get any strong liquidity? No. So let's wait for one to get created, and it was probably news or something. I don't know. It was something. It was probably the wind. So now we could still look into this trade. We could analyze it. Not really something that would be important to look at. Now I wouldn't really try to take shorts because okay, now what we see, no, it's invalid to take shorts from here, but what it's valid to take buys from this zone. So now we could look for what we had a strong liquidity here, so we would wait. Now we would wait it's chopping around, infinitely chopping around. Yeah, here we go. Market opens, it pushed to the upside. Why did I not enter this trade? Because the candle was too big, and I don't want to enter on this kind of risk to reward. So now we just wait. So now we mitigate the zone. So let's see what's happening here. Okay, we go down. We had a lot of range creation. So now when we created this kind of range, we could look for a candle confirmation. So let's say, is this one valid for candle confirmation? Yes, this one is valid because it's 70% of the candle. And now we could go back. Wait. We could go back. We could go back and then see what's happening. And then we could see that it's valid. We put our order above the break. We got our strong liquidity sweep. We got everything that we need. And now we could just wait for what the price does now. So let's see. So we got stopped out again. So no worries. It happens. We just need to stay cool. And now let's go through it again. Okay, so we got a break of fractal structure here. Now we could see a sweep of this low here. So we got our liquidity swept. Now we could look back on the price and see that we are now in the fractal zone. Now we could see if there is in the leg some kind of liquidity build. So now this is dilemma. No, this is correct. Everything is okay with it. It could be better, but it's correct. Let's see. Okay, so we broke the zone, and now we could let's go back. So yeah, what I didn't see, I'm just stupid, that the fact that we changed after this mitigation, we changed our internal structure here. So now it's valid for sales. I forgot to mention it. And now when we are valid for sales, we could look for mitigation of the zone. And then we got a chalk, not a chalk, but another entry, not entry, but a zone confirmation. We got our internal zone here, that it's strong. We could now wait for mitigation. We got our mitigation. Did we get our confirmation? No, we didn't get it. So now we just wait for price to create a fractal to the downside and then to the upside. So let's wait. Okay, so did we create it? Yes, we did create it. We created it here. Now we could say we could wait for now is this liquidity getting swept here. We got a sweep of this liquidity, and then when we get a sweep of this liquidity, we can enter here. We putting our 1 pip buffer. We use our volume tool to see where we could target. We could target until here safely. So yeah, so we put our order, and wait, we got stopped out, but no worries. We wait. We can re-enter because it's correct to re-enter up to 3 times when you have valid liquidity. So yes, oh fuck, I just so we can enter here, and now let's see what the market shows us. We can put our TP here. We put our entry here. We got entered, and we got our take profit. So moral of the story, just always remember to stay on the charts, and not to stay on the charts, but always read what the charts give you. So that means look what the charts want to say to you, look what the charts want to show, and always stay on the look when the internal trend changes. Just always remember that, and go do your own backtesting. January honestly isn't the best month. Wait, what the heck is this? Why? So this month is not the best one, but I have 1 year. This is the same strategy. So this is the years, and this is January. As we can see, at the start it's really slow, but then it gives out the pace, and then we get a lot of good entries and everything else. Okay, I hope everyone got a good session today. I talked a lot, and I will see you all on the next session. Have a nice rest of the Sunday.